With inflation cooling but growth now stalling, all eyes on a potential December rate cut and what it says about Australia's slowing economy. Joining us in the studio, Dale Gillam from Wealth Within. Good to see you, sir. A December rate cut won't it happen?
Look, I think it will. I think we've got to. We're in that 2 to 3% range the RBA wants us to be in for CPI, although the announcement, 11:30 Wednesday with the CPI data, that'll help understand it. If it's up, then I'm not sure what's going to happen.
Well, up is a disaster, right? Up is stagflation. We've got unemployment going up, and particularly in Victoria, where it's the highest unemployment and the highest debt and all the issues. And then if you've got unemployment as well as inflation going up, what does that say about the state of the economy?
Well, I mean, when you look at real GDP per capita, out of the 11 quarters the Labor government's been in, 9 of them have been negative.
Yeah.
So I've been saying for at least 2 years that we're in a recession, but we're not allowed to say the R word.
But this year they were re-elected. I've never seen a government re-elected during a recession in my lifetime.
Neither have I, absolutely. You think, well, let's change governments, but we have been in a recession and we're feeling it. Everybody's feeling it. It's just because we haven't had 2 negative quarters of CPI that causes to be in a technical recession.
So if we hit the technical recession threshold, do you see things changing? Do you see the way businesses change? Do you see the way government will change? What will it actually mean in real terms?
Well, we have to see it change because we can't keep it up. You just walk down any street in any capital city, there's empty shops, there's empty office buildings. Businesses are struggling. We're seeing largest or record levels of bankruptcies for businesses. The list just goes on and on and on. Consumer confidence is down. Jobs are down, as you mentioned. So there's a lot of things happening at the moment. People feel it. And they can't afford houses. The government can't build enough houses. Building approvals are down. The list just goes on, and to me,
and mortgages have been going up, obviously, over recent times. So why has the RBA, have they been too slow? Is that the story here?
They always are. They're too slow to put them up.
Because the data takes too long to come through.
Correct, but if all you've got is a hammer, everything looks like a nail. You know, they can only raise and lower interest rates.
But we've seen drastic changes to the RBA board this year that Labor has brought in. It's no longer every Tuesday of the month that we hear.
Correct.
I don't even know when it is these days, right? It's changed so much. As well as bringing in the unions on the board to bring in the real person, and yet they're still too late?
Yes, absolutely. Because they're looking at, to me, when you're looking at CPI, I don't think it's a real measure anymore of our society. Because a lot of the CPI we saw after COVID was what I would call sort of fake CPI, because it was obviously supply chains were restricted, all sorts of things caused prices to go up. We've also got the net zero causing energy prices to go through the roof right across the board, gas, oil, electricity.
And yet the people want net zero, even though it's clearly leading to higher prices. They've brought in a government despite, as you say, 9 quarters of negative growth. What is going on? Are we living in a parallel universe? This isn't what is usually meant to happen.
Yeah, we are. We're already at net zero. When you talk about proper net zero.
Well, businesses are.
Businesses are, absolutely.
Yeah.
I mean, how many business people do you speak to? I speak to a lot, and they're all struggling. All profits are down.
Everyone is looking for ways to save money.
Correct. Yeah. Everybody's trying to look for AI
Everyone's
to save
got 100
money.
proposals out and no one's signing them.
Yes, absolutely. And it's driving people crazy. And I think what we're going to see, Melbourne Cup Day, the next rate announcement, which is Tuesday of next week, which is normal for them. I don't know whether they're going to celebrate or not. But hey, next rate cut not likely till December. I'm pretty sure we're going to see it.
Really? So you think November will be a nothing and they'll wait for December?
Yeah, but
even though you think they're already late?
Correct. Even though I think they're already late, absolutely. Because they're not. As I said, they're really slow putting them up, but they're really, really slow pulling them down because I don't want to see CPI race ahead. But then I think they're looking at the wrong numbers. Now, I'm not an economist. I studied at high school and a little bit at university. But what I'm looking at, we're in a recession. We need help.
Do you see that we've got this, I guess we need a warning cut? Do you see that being in this kind of new phase where we need to see this rate relief urgent?
Well, that will be the December cut, I think. I mean, it's probably 50-50 for next Tuesday, but if they don't do it next Tuesday, it'll definitely be December. I mean, I know, the big banks are calling for at least one more rate cut because they're seeing that, when you're looking at houses are struggling, that cost of living crisis is there. So how can they not cut it?
What I'm surprised about, though, is that we haven't seen a collapse in the housing market then. So if we've seen 9 quarters of negative growth, if we're seeing unemployment raising, if we're hearing the banks say people are struggling, When you drive down a main street, you see shops closed. When you drive down a suburban street, you don't see for sale signs.
No, and this is the thing is people have this love affair with property, and it's interesting. I was chatting to a person at the CBA a couple of weeks ago, and they're saying about 70 to 80% of first home buyers' loans are secured by the bank of mum and dad.
Yeah.
In either the deposit or in the bank mum's and dad's house up for security or in some way. And to me, that's alarming. When I bought my first house, I would never even look to go and talk to my mum and dad.
One other thing, just on this topic before we move on, we've also seen government spending now start to be curtailed. So when you look at the graph, it went up and up and up and up, and now it's topped out.
Well, they've run out of money, haven't they?
They've run out of money. Does it then start to go down the other side? What happens
You'd
to
hope so.
all of these jobs that the government has put on? 8 out of 10 jobs over the past year that have been created by the government. And Jim Chalmers' point has been, well, if it wasn't for us, then what?
Correct, but then I'm a person that says let's rip the Band-Aid off fast, not do it slowly. So they've been employing people to try and make the economy look better than what it is and make themselves look better than what it is. And I don't think they've done a good job of that. And you know, we're seeing...
Well, they've needed to make it look good so that the unions who support them can get the changes to workplace rules through that they've wanted.
Absolutely, and this has caused issues. I mean, obviously, construction. You're talking about housing prices. People aren't building homes at the moment because it's just too expensive to build just a very average home. The cost of, I think the quote for the government said even $500,000 for them to build affordable housing. $500,000. Plus you've got to buy the land. So therefore, what's the house going to be worth for affordable housing? It's got to be around $1 million.
Yeah, unbelievable. All right, CSL facing tough headlines, falling profits, job cuts, shareholder unrest, but could this be a buy the doom moment for investors? CSL feels like one of those companies that you have a big announcement, things go back up again. I mean, they were doing pretty well during the pandemic.
Well, they did, but they've been pretty terrible since then. I mean,
what's happened?
They've had 295 weeks of basically falling, and that's what happened. They went from about $340, they're around $178 now. And to me, I whilst I'm a technical analyst, not necessarily a value investor like Buffett, Buffett's statement, buy and doom, sell and boom, really rings well.
Yeah, but if it's been 6 years of doom, how do you know that this is the bottom?
Because what you're seeing is when you see stocks hitting the bottom, it's pretty much the worst news, and it doesn't get much worse for CSL at the moment. You know, they're cutting 3,000 jobs. You know, vaccine rates in the US are down. You know, it's obviously down in Australia and other parts of the world. So there's pretty doomy news, and they're looking at single-digit growth over the next few years. They're not looking at double-digit growth that they used to look at. So things are really, really slowed, and to me, this spells opportunity. Not quite yet, but if it holds around this 178, 160, 170 level over the next few weeks and starts to move up, I think this could be the diamond in the rough.
When you talk about that, but there's still that single figure growth, wouldn't you want to wait for the double figure growth to be able to say things are on the improve?
Well, you'd think so, and that's why most investors look at it. But when I'm teaching people about investing, you've got to look at something that other people aren't looking at. So other people are looking at single digit growth, you know, hey, they're laying off people, vaccine rates are down, blah, blah, blah. They're looking at that, whereas I'm going, well, what's the possibility for CSL? Because the big institutions buy for 3 to 5 years. And so what we'll see is those single figures turn into double figures down the track. You want to be in there before it, and it's like you want to be in before the elephant starts charging. And right now, I'm not saying to buy today, I'm not saying buy next week. I'm just saying put it on your radar right now, and if it holds at these levels and starts to move up a bit, this could be a nice little stock for super funds and, you know, people for more buy and hold.
Yeah, all right. I'll play devil's advocate again. RFK Jr., is he the biggest threat to CSL? And if so, he ain't going anywhere for 3 years.
Well, you would think so, but no, because you're going to try and change a huge, you know, you're trying to turn the Queen Mary is not easy. And obviously vaccinations, etc., are around everywhere.
It actually was easy. I was on it in Sydney Harbour and it turned around at 4 a.m.
Yeah, but as you see what I mean, people have to change habits. People are used now to going to get all their vaccinations and all the other things they do.
Yeah.
So CSL is not going to slow down too much, and he's around for 3 years. How much can he change? Because there's still, obviously, he's still got to get things through the US government and obviously get them approved. Some people think some of his views are a little bit too wild, and other people think he's on the money.
Yes, we won't touch that one. Appreciate your time as always, Dale Gillam. Thank you.